In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. Mind you, for the month of September, we're going to have the Fed cutting interest rates, which is either going to be 25 or 50 basis points. And based off of Jerome Powell's last speech, it's most likely going to be 25 basis points from what he stated. And he said this is a time for rate cuts. So there is a good chance that most likely, even though they pretty much are committing to the rate cut, there is going to be a rate cut in this meeting, which is in the middle of September. And then one thing to note, on Monday, September 2nd, 2024, it is Labor Day holiday, so the markets will be closed. And for Tuesday, September 3rd at 9:45 a.m., we have S&P final U.S. manufacturing PMI for the month of August. At 10 a.m., we have construction spending for the month of July. And at 10 a.m. as well, we have ISM manufacturing for the month of August. Now, again, the market is anticipating 25 or 50 basis points, so that could be the reason why, in terms of the lead up for the run up for today, even though the indications were kind of showing to the downside, but we had inflation numbers coming out and so on and so forth. So the month of September could be a good month, hypothetically, for the market. And the reason why I'm stating that potentially, even though it could get pulled down based off any news that comes out, right, that's negative and so on and so forth. But if you look at the S&P, Nasdaq, and Dow Jones, so I'm going to be showing you right now the one-year charts. If you look at the MAC line, this indicates if it's in a bearish or bullish movement. So currently for the Dow Jones, it is in the bullish movement and it had a stronger green tick as well. And if you look at the S&P, potential reversal to the upside. So it was still bullish, mind you, but it looks like it got a potential reversal to the upside for additional growth to the upside. And then for Nasdaq, same thing. Potential was going to come down to the bearish movement, so potentially downside, but it got a potential reversal to the upside uptick. So we shall see. The interesting fact I should say, is we are at all-time highs for two of the markets, the Dow Jones and the S&P. The Nasdaq not quite there. The Nasdaq is at a level that is a pivotal price point, I would say, but not necessarily the all-time high, or not necessarily, but it's not the all-time high. So here's the Dow Jones, and if you look at the all chart right about here, we're at the all-time highs. 3-month chart right about here, and we closed pretty much at all-time highs, so 41,563 points. Same thing with the S&P. Now the S&P is at the all-time highs as well, so I'll just visually show outside. By the way, this is an upward trend resistance line dating back since 2010. The thing is, though, we still have more room to grow to get to the up level, just FYI. But all-time highs, right? And then go to the 3-month chart, and we're there. Now, if you count the pre-market and after hours, then the price point is $565 and some change. Mind you, we closed at $563 and some change. This is ETF SPY, which is the ETF for the S&P 500. It's just the same thing, just different ratio. And for Nasdaq, I'm looking at ETF QQQ. Mind you, closed at $476.27. And the pivotal moment, I would say, is probably pretty much around this level, because there's the moving averages, plus we're at a level where we've seen support and resistance multiple times, and consolidation, support and resistance, and then close to the upward trend resistance line dating back since 2010. So in case you're new to the channel, I've shown this before, but in case you're new, it's an upward trend resistance line dating back since 2010. Every time we went up to it, got knocked down, so on and so forth. Mind you, the market was still going up, so it doesn't mean the market is not going up. It's just, it was pretty much stuck underneath it. Did break through in 2020 to 2022, but then came back underneath it, had issues passing it in March of 2024, and then did pass it slightly again in June of 2024, and then came back underneath it in July of 2024, and this is the line. Now, we went up to it recently in the month of August, and we have a couple false breakouts, and then came back underneath. So you could argue potentially, if you're expecting to go to the upside, again, indications are pointing to the upside for the MAC lines, for the one-year chart, like I showed visually, and the market is expecting the rate cut regardless, what could be a positive catalyst. The only thing I would argue is, you could argue that the rate cut is already baked in. The only reason why, maybe in my opinion, again, this is all just my opinion, so please do your own due diligence and research before buying and selling, is potentially the market, even though Jerome Powell pretty much stated it was going to be 25 basis points most likely, that since the nature of the Fed, they assess things as the data comes in, and if they see that the inflation numbers, because the week before the rate cut is going to be happening, or at least I believe so, yeah, the week before, because on September 11th and September 12th, we have CPI and PPI inflation numbers. And since the nature of the Fed is to assess the data points as they come in, then hypothetically the market could be expecting that if inflation numbers come in better than expected, even more and more as it comes in, that the Fed could decide on a 50 basis points rate cut versus a 25 basis points rate cut, which would hypothetically add as a catalyst more to the upside, right? Even though we're pretty much at all-time highs at S&P and Dow Jones, and then close for the Nasdaq. This is the all-time highs for the Nasdaq right about here. But again, this upward trend resistance line dating back since 2010 could act as quite a bit of resistance, as we've seen recently, right? And then the reason why we spiked up previously was inflation numbers too. So this is a 2010 line. It might be difficult to see, I apologize, but upward trend resistance line right about here. And I believe this was inflation numbers came out because this was during pre-market, broke through and then stayed up. So the same thing could happen. Hypothetically, we could be stuck underneath this upward trend resistance line until inflation number comes out, or not inflation numbers, the date of the rate cut, and then the rate cut happens and we break through the upward trend resistance line of 2010, right? So if you're optimistic to the upside for Tuesday's trading day, I'll cover QQQ first, which again is the ETF for Nasdaq, and close at $476.27. Could have some consolidation issues getting out of this area because we have all the three moving averages pretty much at this price point between I believe it was 476 and some change, and then 473 and some change between the moving averages, and then the horizontal resistance and support consolidation zone about 475 and some change. But either way, if you're optimistic to the upside, mind you, there will be some resistance at 481 and some change, and plus the clean number of 480 and some change. But essentially, to get to it is about 485 and some change for the upward trend resistance line. So again, that's $485 and some change. And then mind you, the longer we take, the higher the high will be. And then there is resistance at the 487 and some change. So there could be a potential false breakout like we've seen before, and then come back down underneath the upward trend resistance line. Now you're expecting the downside pull potentially, because that could happen obviously, is basically you're looking at potential support at the 468, but I wouldn't even bother with that. Personally, I would go with this more horizontal resistance and support level. Plus we've seen a drop at that level as well if I just extended actually, but you could see with the dashed lines, it's exactly where it's at. And that's about $465 and some change. You could argue 464 and some change, but 465 and some change. And then the last one, in my opinion, just because I don't expect to go lower, because again, the momentum was pretty strong at the close of the trading day on Friday, August 30th, 2024. Plus, again, the markets could be anticipating for a potential 50 basis rate cut. So we'll see. But for Tuesday's trading day, I don't expect to go lower than $460 and some change, which is about this zone. We've seen resistance, support consolidation, and so on and so forth. And even if you extend it right about here, there's somewhat of support consolidation there too. Now that's for Nasdaq. Now if we're looking at the S&P 500, basically, like I stated, all-time highs. Mind you, closed at $563 and some change. This is for ETF SPY, which is an ETF for the S&P 500. And first level in terms of the upward trend, not upward trend resistance line, we're at it right now, but the level we need to pass is about $465 and some change, and that is the all-time high for the pre-market and after hours time frame. Now, if you're expecting to come to the downside, there's potential support off this moving average right about here, which is about $560 and some change. And then the next level is for the moving average 557 and some change. And then these two zones right about here, 556 and some change, and then 555 and some change. I would argue that would be the lowest, but you could potentially expect that maybe this would be the lowest for the 553 and some change. I wouldn't put that in play because that was more based off the moving average. I would expect, in my opinion, the 555 and 554 and some change to hold off. 554 is more of these two drops right about here, and the 555s are right about here based off these three drops right about here. But yeah, I don't expect to go any lower than that, again, because the momentum is more for the upside for the time being. And it would be pretty much a drastic drop for the S&P, given that the S&P does not move that quickly, in my opinion, or that is not that volatile. And plus, you can see the volatility index right now is at 15.01 points. It was not pretty volatile today for the most part. Now, again, that is for Friday, August 30th, 2024. Now, for the Dow Jones, again, all-time highs, right? Closed at 41,563 points. So it would have to continue go to the upside past that. But if you're expecting to the downside pull, you could expect a potential support off the moving average about, give or take, 41,000, and by the time you get to 41,050 points, and then this moving average plus this downward trend resistance line that could act as support, you're looking at support pretty much at the 40,700 points, give or take. And then this upward trend resistance line dating back since 2021 could act as support, and you're looking at, and you've seen it right about here with that down drop right about their support. it could be around 40,500 points. And this last moving average, which I do not expect to go lower, but if you do, it would be about not lower, but lower than this level, about 40,340 points, give or take, by the time we get to it. Now, if we do drop dramatically, then the clean numbers obviously would help out with the 40,000 clean point support level. The only thing is, I will say, I've seen the 40,200 act as support before, so I don't know, it depends. If we're dropping that fast, in my opinion, we could probably hit that 40,000 clean, except I don't expect that to happen for Tuesday's trading day personally, and it's more for worst case scenario consolidation or upside, and then probably just bounce off these levels if we were to get pulled down a decent amount. But that's basically it for today's video. If you found it beneficial, helpful, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And I do post these videos daily, so I highly encourage you to follow and subscribe if you want to be notified when I do upload my next video. Thanks again for watching. I appreciate it. Take care. God bless and peace.